Okay, next we're going to look at equity transactions. So that's recording common stock dividends, owner investment, and owner withdrawals. So common stock is what we call it in a corporation when the owner invests in the company. If it's not a corporation, like a sole proprietorship, we call that an owner investment. And then also a dividend is when money gets paid out of the company to the owners in a corporation. And if we're not a corporation, we'll call that owner withdrawals. So it's the same idea, but they have different names for it depending on if you're dealing with a corporation or dealing with a non-corporate entity like a partnership or a sole proprietorship. So I'm on equity transactions in chapter 6 in the book, and I'm in the section that says to record the sale of stock and payment of cash dividends in the sample company do the following. So step 1 is to continue where we left off. If you remember at the end of the last section, we had to close out, and now I've reopened it to my sample company file. And I'm going to click new. And instead of adding a check like I had before, I'm going to add a bank deposit. So now I'm telling QuickBooks instead of a check, which takes money out of my account, I'm adding a bank deposit, which is putting money into my account. And we're going to add new, so that was step 2, hit the bank deposit. Then we're going to go to the drop-down list of received from. So not select payments included in this deposit. This would be payments that we've already received, but we want to mark now as being deposited. Instead, we're going to be coming down here where it says add funds to this account. I'm going to hit add new, and I'm going to record this as WB Investments. We're going to make sure it's recorded as a vendor, because typically when we hit deposit, we're assuming it's a customer. So we're going to change that to vendor. And then we're going to click save. So we've added a new vendor called WB Investments. And then we're going to accept the date that's already given in the system somewhere. There it is. And that's step 5. And then step 6. Oh, let's see. Here we go. So we're going to get to the account. This is step 6. Add new from the drop-down list for account column. And we're going to add step 7, equity. For detail type, step 8, we're going to choose common stock. Somewhere. Oh, it's at the very top. I missed it. We're going to leave the name of it common stock, and we're going to hit save and close. As the payment method, we're going to select check. And we're going to choose 10,000 in the amount. Whoops, accidentally collapsed it again. All right, so here we're telling QuickBooks, add $10,000 to our checking. This is money received from WB Investments to the common stock account, meaning WB Investments is buying into our company, putting money into our company to become a stockholder. We received a check from them in the amount of $10,000. And let's see. Step 12, we're going to hit save and close. And that's it. Now we're going to record a payout to our shareholders, which is called a dividend, okay, by clicking add new. So this is step 13, and it's a check. And then we're going to add a new payee. We're going to call that payee shareholders. That's step 15. Let's make sure it's selected as a vendor, and we're going to hit save. We're going to accept the payment date that's already in there. And then under category, we're going to select retained earnings. And the amount is $12.50. So again, what we're telling QuickBooks here is subtract $1,250 from our checking account, pay it to the shareholders, and record it to the retained earnings account. So it's going to actually be a reduction to our retained earnings account because we're paying out cash. So this is how we record paying a dividend, paying out cash to the shareholders. Step 19, we're going to hit save and close. And that is the end of the equity transactions section.